Hey guys, how's it going? My name is Hamish Hodder and we're back with another video. In today's video, I'm going to be giving you my earnings reaction for Facebook's third quarter earnings for 2018. So they just came out with their earnings report this morning for me, and they had their conference call and I listened to their conference call and I just wanted to give you my thoughts. So I thought we'd start off by going through some of the highlights of Facebook's earnings, and then we'll jump in and talk about some of my reactions to their conference calls and sort of the key areas that I took and the key takeaways that I had from what Zuckerberg was saying on the conference call. And then we'll finish off by doing an updated valuation on Facebook. So we'll do an intrinsic valuation, but more importantly, we'll look at the expected return of Facebook now that we've updated the latest trailing 12 months EPS and that the stock price is vastly different to what it was when I purchased the stock. And pretty much if anyone's purchased the stock in the last 6 months, the stock has been falling, so the stock price is vastly different to when you purchased it. So it's good to have a look at what the expected return is right now. So that's what we've got on the table for today's episode. If you do enjoy the video, make sure you leave a like and let me know your thoughts down in the comment section below. I love having discussions with you guys about earnings and about different topics, so make sure you let me know your thoughts down there. Subscribe if you enjoy the videos and you want to see more, but for now, let's jump into it. So I thought we'd just start off by going through some of the highlights of their press release. So we'll start off with earnings per share. They came in with earnings per share for the quarter of $1.76, which beat expectations by quite a lot actually. Their expectation was $1.47, so that's quite a big beat in terms of EPS. When it came to revenue, there was a revenue miss. Revenue came in at $13.73 billion when they were expected to do $13.78 billion, and that represents 30% year-over-year growth. So even though they missed, they still grew 30% year-over-year, and I just forgot to mention that earnings per share of $1.76 represents 11% year-over-year growth. So you can see that revenue is still growing really strong, but that earnings per share and the net income is starting to grow a lot slower because of these increased costs, and we'll talk about that a little bit later. Investors also like to look at the daily active users and the monthly active users as a bit of an indication of how the platform is going. In terms of daily active users, they came in at 1.49 billion compared to 1.51 billion, which was expected. Monthly active users was 2.27 billion compared to 2.29 billion, which was expected. So they missed on both of those, but not by a lot. It still blows me away that Facebook has so many people on their platform. Another stat that just blew me away was that 2.6 billion people use at least one of their platforms. So whether that's the Facebook platform, the Messenger platform, Instagram, WhatsApp, one of their platforms, 2.6 billion people, and that represents 34% of the entire world population, which is pretty insane. That blew me away that they've got so many people on their platforms. And lastly, another key area that investors like to look at is the revenue generated by each user, because it's great that they have billions of people on their platform, but how much money are each of those people providing for the platform in terms of advertising revenue from companies advertising in front of the audience. And Facebook has an average revenue per user of $6.09, which was exactly what was expected, but of course, since investors expected that there would be slightly more users, that's why they missed on revenue, because they were in line with the revenue per user, but they missed on the number of users on their platform. So then I just wanted to talk about one of the negative things that came out of this. There was a few negative things, but this was one of the main ones for me at least, and that was capital expenditure, because this eats into free cash flow. And capital expenditure, they said that in 2019, next year, financial year, there's going to be capital expenditure of about $18 to $20 billion, which was higher than expected. And everyone knows why this is now. It's because they're going to continue to spend massive amounts of money on security and privacy. And that is a good thing, for sure. That is a really good thing. But what we like to see, if a company is spending a lot of money in terms of capital expenditure, we like to know that they're going to get a high return on those expenditures. But they're not going to get a high return on privacy and security. Maybe over the long run you can make that argument, but in terms of direct investment that's going to bring in more money for the company, bring in more revenue and reduce costs over the long term, that's just not what this capital expenditure is going to do. So it's really just higher expenses that isn't going to increase revenue, and as I'll talk about in a little bit, it's actually going to decrease their revenue. So then we had the conference call, and Zuckerberg spent a lot of time talking about a lot of the problems faced by the company, but he also talked about some of the opportunities that they have, and I still think that there is a bright future for the Facebook platform. One of the things that Zuckerberg spoke about was this transition of user behavior from a feed-based sort of social media platform to a stories-based. So if you use Facebook, if you use Instagram, if you use Snapchat for that matter, you know what this sort of stories mode is. And essentially, Zuckerberg sees this transition of user behavior from everyone using the feed, which was what Facebook was originally all about, basically just scrolling through the feed, posting status updates and making posts and events and all of that stuff that happens on the feed. He's noticing a transition from that into stories, which is sort of this thing that he's stolen really from Snapchat, but I think that him and the Facebook team have been able to do that a lot better than Snapchat have, and they've integrated it into their Messenger, their Facebook, and their Instagram platforms, which is really great. But essentially, he spoke about how they're trying to monetize stories more effectively because it's been a really rapidly growing component of their business, and they just haven't been able to keep up with their monetization. So that's what they're focusing on at the moment. One of the areas they're focusing on, at least, is to monetize that area, because that's where a lot of users are heading, and it's where the behavior of users is sort of getting concentrated in terms of all of their platforms. And as I just said, he spent a lot of time talking about some of the challenges. The first thing we already mentioned was that spending money on security and privacy doesn't give you a high return on investment, so it's kind of just money going out there, but it's not going to increase revenues over the long term. The second thing is that user behavior transition from feed to stories and video. While that might seem like a good thing, it's really not in terms of revenue generated per user. So when it comes to the feed, it's really easy for them to generate large amounts of revenue per user because they can put heaps and heaps of ads embedded within the feed. But in terms of a video and in terms of stories, they're facing challenges in meeting that kind of revenue generated per user, because you can think of a person watching a 10-minute video, how many ads can you run on that? And how much, you could charge more for the ads, but really you can only put maybe 2 or 3 ads before it gets really, really annoying. Whereas you could think of a person scrolling through their Facebook feed for 10 minutes, how many ads could you put in that time? You could probably put 100 ads in the time that someone spends scrolling through 10 minutes on their feed. So he basically indicated that that's one of the challenges they're going to face, is as people transition from feed, they've got to be able to effectively monetize video and stories. And while he's speaking about this, and it is a concern, we actually haven't seen this realized in their results at the moment. Revenue per user is still growing, so it hasn't slowed down or gone negative or anything like that. It's just a challenge that they're facing and that they're going to have to execute perfectly in order to overcome it. And then the last thing that he mentioned was that revenue growth is again going to continue to decline by high single digits for the next quarter at least. So that means that their growth is going to go down from 30% growth, which we just had in revenue from this quarter, maybe down to something like 22%, in that sort of range, in the 20 to 25% range. And just to give you my thoughts on this, while it's certainly not great to hear that a company has to spend large amounts of money and not get a high return on those investments, really these costs and these capital expenditures, they're just maintaining the business. They have to do it in order to keep people on the platform, and it's not about growing the business, which is something I really don't like to see, because of course as a shareholder, I do have a small speculative position in Facebook, if you didn't know, but as a shareholder, spending heaps and heaps of money is basically spending my money, because it's money that they have to spend on privacy and security, and they can't spend that money on growing the business. So it takes away from the growth of the business, which isn't something that we like to see. But we can't forget that the Facebook platform has over 2 billion users using their platforms every single month. 2.6 people using one of their platforms every month. 1.5 billion people using their platform, just the Facebook platform, every single day. So while in the short term, these security costs look like they're going to hurt the bottom line of Facebook and they're going to hurt their short-term profitability, the bigger picture here is that Facebook has a platform that has access to 34% of the entire world population. And they have so much cash and so much short-term investments and money on hand for them, and they have a management team that has been able to grow a company, almost one of the fastest growing companies in history. I think that as long as they continue to be effective in their investments, as long as they continue to keep up with trends and follow user behavior where it's going and not get stuck in the past, I don't see why they can't continue to grow at double digits over the very long term. So I just mentioned one of the opportunities that I think Facebook has over the long term, and it's particularly close to me as a creator on YouTube, and that is Facebook Watch, which is basically Facebook's version of YouTube that's going to compete directly with YouTube, and basically creators will be able to upload to the Facebook Watch platform and share the ad revenue with Facebook in the same way that creators on YouTube share the ad revenue with YouTube and Google. Now, I've thought about this quite a lot, and YouTube itself, it's a massive platform, it dominates the market, but really what it comes down to is the reason it dominates is because there are so many users using the platform. And why are there so many users using the platform? Because it's where you can get the best information. There's the most amount of creators. I think there was something like 500 million YouTube channels. So it was a crazy number. There is a crazy number of people creating content and delivering useful information to people. And of course, the biggest YouTube and the biggest internet personalities are on YouTube. They're not on any other platform. But I honestly think that YouTube has only dominated in this space because there's really been no competitors. If Facebook was to come along and offer better ad rates, a better split with creators, I don't see any reason why creators like myself and massive creators wouldn't just upload content on both platforms. Because if you're going to get 50 or 60% ad revenue from Facebook and you're only going to get 30 or 40% from YouTube, then why would you not upload on both platforms? And that means that Facebook's platform will grow really quickly in terms of being a video platform. They already have the users, they just need the creators, and they'll get the creators if they give them a good share in the ad revenue. And I think that they can offer that because they have so much money, and it's a good investment because if a lot of creators not only upload on both platforms, but actually stop uploading on YouTube and start uploading on Facebook, Facebook could completely take over in that area. So that's just one of the areas I think that Facebook has a massive opportunity that really no one's talking about at the moment. Everyone loves to talk about Facebook's problems with security and privacy at the moment, and that consensus is baked into the price. You've seen that. That's all that anyone's talking about, and look at the stock price. It's down 30% from its high, I think, something like that. But underlying in the business, there's still these core opportunities and the ability to grow at double digits in some of these areas. They still have massive platforms, 1.5 daily active users. That is huge. So I think as soon as the consensus sort of realizes that these security problems, while they suck in the short term, they're not going to affect the long-term profitability of a company that has 34% of the world population using their platforms. I think that the stock price over the long term will reflect the long-term profitability of a company like Facebook. So now that we've talked about the earnings and their press release and their conference call, let's go and do a quick valuation and talk about the expected return now that we've updated our EPS and now that we've updated the current stock price, and see if at the current levels it offers a good opportunity for you. Now, just to be clear, despite being fairly bullish on Facebook in terms of a business, I still only have a small speculative position in the stock. And essentially that's because it's a new company and it's a high growth company, or at least it's transitioning from a high growth company into sort of a slower growth sort of value play company. So I just want to put a little bit of money. I want exposure to the success of Facebook, but I'm not super confident because, again, they're a new company and it's really difficult to predict where newer companies are going to go in the future. So the trailing 12 months EPS for Facebook is now $6.64, which is up 2.6% from the previous quarter. So nothing has really changed in terms of EPS, but of course the price has come down quite dramatically since then. So the opportunity to make an investment make a successful investment has sort of increased in that area. So let's have a look at the value matrix and see what expected return we could get on this stock. So we'll start by looking at the value matrix in terms of the current stock price. So as you can see, the growth rates I've got on the side are between 6% and 37% over the next 5 years, that is. And then across the top, I've got a PE ratio somewhere between 20 and 30. And you can see that even if they perform pretty slowly, because they're trading at quite a low multiple, they only have to perform at somewhere between 12 and 15% for you to get your return. Because I think that not only will they do double-digit growth, I think that their PE ratio will increase over the next 5 years, because I think it's a really beaten down stock at the moment, while the consensus is all focused on the security and privacy issues. Personally, I don't think that they're going to do anything like 30% growth over the next 5 years because of these security costs, but I think it is very, very possible that they'll do something between 6 and 25%. I don't see any reason why they couldn't do that, especially if they begin to slow down their privacy costs and they stop spending so much money there, because remember, they increased their costs 50% this quarter and they still grew EPS at 11%. So if they didn't have to do that, which they're doing it now, but they're not going to be doing it forever, or at least I don't expect them to be able to have to do that forever, then that EPS growth will go back up again, and over a 5-year period, I think it's pretty possible that they can still do double digits, or at least 6%, which would still give you a pretty good return. In terms of the value matrix from when I purchased it, so the price that I bought it at was $177 per share. You can see that the value matrix offers a little bit worse returns. If they do that 6% growth, I'm probably not going to make a decent return, probably something in the 5 to 8% range. But if they do double-digit growth, and even if they outperform what the expectation is, the expectation at the moment is 16%. If they do something in the 20% range, I'll still make a very good return on that speculative proportion of my portfolio. In terms of evaluation, if we use the growth rate that the analysts are expecting over the next 5 years, which is 16.5%, we come up with a fair value of $177 per share, and we get a buy price of $88. So it would still have to come down, maybe 30 to 40% more in order for it to be a buy at the analyst's expectation. But I think at that price, at around $90 per share, $80 to $100 per share, I think it's almost a no-brainer that you would make somewhat of an investment in Facebook, because I think it's highly likely that they will achieve growth in that range. Thanks for watching, guys. I hope you enjoyed this one. If you did, make sure you leave a like. It doesn't take too long and it helps me out a ton. If you want to see more, make sure you become a subscriber. And I just wanted to mention for my regular viewers, next week I'm actually sitting my final university exams later in the week. So I may not get 3 videos out to you. I'll do my best to get 3 out, but I might not have the time to produce 3 videos. So just so you're aware, there may be a bit of a lack of videos next week, but of course the week after that they'll be back to 3 or 4 videos a week, so nothing to worry about there at all. Also on Saturday there's a new episode of the YouTube stock portfolio coming out, and you're going to want to check that one out because I'm going through the portfolio performance from the month of October, so it's just a bit of an update, and I'm also going to talk about adding some stocks to the public portfolio. So you're going to want to go check that out if you haven't been following the series, or if you have been following the series, thank you for following the series, and go check that video out when it comes out. But for now, guys, I hope you have a great day, and I'll see you in the next one.